So good morning, gentlemen. I thank you very much for the opportunity to offer you some input regarding your wonderful startup organization down there in North Carolina. Let me make sure I introduce myself. I'm Brian Cohen. I'm the chairman of the New York Angels. We happen to be the most aggressive angel firm in the United States. And I recently wrote this book on what every angel investor wants you to know. So my perspective has both a marketing one, but a very strong one related to how you actually raise financing.
So hi, Brian. It's good to meet you. My name is Greg Moyer. I'm the Vice President of Products with Infina Connect, and looking forward to this broadcast.
Good morning, Brian. My name is Phil Tom. I'm the founder and CEO of Infina Connect, and
Great.
I'm looking forward to some of the input.
Great, so let's get started.
My question is, since we have to raise a lot of money down the road, and I have some past experience working with VC and find out that if some direction of our line can be very destructive. So I want to consider alternative way to finance a company, not going through a traditional VC route. Just want to hear from your thought. Is that feasible, and what's the pros and cons of going through other route than the VC?
At some point in time, companies like yours require a lot of money, and it's usually based upon certain timelines. You don't find yourself under FDA guidelines. You're pretty much an IT solution company, am I right?
Correct.
Right. But you do see you're going to need cash over periods of time. I haven't seen your financials, so I can't tell exactly what your milestones are. But it's very clear angel investors like to invest in companies that only require one or two investments. Anything beyond that, they lose the opportunity of maintaining whatever their various levels of ownership are. And they are then put in a very precarious position of having later stage investors call the shots and dilute them out. That's a very real issue in angel investing. Um, how much money do you imagine you're going to need to break even or get to some place where you're going to be self-sustaining?
We don't need that much or break even. We already last year break even, and I think we just need the capital to launch a sales and marketing
And how much money is that?
nationwide. Well, somewhere between 5 to 10 million, but
Yeah.
we can go with less than that to get started to the next stage. So
Yeah.
we are trying to raise 5 total.
Right. So that is not an angel round of investment. The average angel round of investment is $750,000 today. And if it goes higher than that, it's going to be syndicated maybe to 1.5 million, two at the most. So a $5 million investment is really a VC round. It is not an angel round. There are some sophisticated angels, but rare, and even rarer still in the healthcare area. So you've got a challenge. That's a real problem. And you shouldn't, just by way of making note, you shouldn't say you're going to need between 5 and 10 million. That makes most angel investors or any investor a little uncomfortable that you're unclear of specifically how much money you require, particularly since that's such a wide breadth of $5 million. And then you said you could use even less than that. So I think you need some clarity on the specifics of what money you need and when. And if I had an opportunity offline to discuss it with you, I'm sure I can help.
Okay, appreciate that. Great.
Well, one of the kind of on a related note, Brian, is that as a small company, through Sue's efforts and the founder's efforts, we found ourselves with a number of areas that of opportunity that create assets, but on the other hand, some focus issues. And so I don't know if you have any advice in terms of guidance for a small company that has a number of opportunities, but those opportunities create focus issues as well at this stage in the game.
Well,
Now, at what stage do we focus? What stage do we, continue to diverge and explore opportunities?
Well, two things, too quick. One's a story. I had the opportunity of meeting Packard from Hewlett Packard when I started my first company. I asked him, sir, gee, give me some great advice. He was Hewlett Packard. Some people may actually remember that company when it was a great company. And he said, Brian, most young companies don't die of starvation. They die of indigestion. I took that to heart. And of course, I followed it in all the businesses I had. So you're right now in a research and development phase. You're listening to your customer and you're meeting their needs. And you're obviously great developers and strategists to do so with the two products that you've already created in referral management care and prescription drug management. Neither of those are focuses unto themselves, because even in those contexts, you can find focus. So wherever the opportunity is to scale, that's what you really want. And I don't know, do you own all of the code, or were these work for hire projects? Can you resell these, or are they platforms for other organizations?
Well, we own all the code, and it was done in a way that so that there is a platform, so there are rebuildable components, usable components to make future deliveries that much more effective.
Yeah, so how much of the platform is easily transferable? What percentage of the platform is easily transferable to another client who needs the same kind of solution?
Yeah. Actually, let me answer that question.
Sure.
We already licensed our software to a partner that uses it to develop something else. So the platform is reusable with some customization, can be used for other applications in healthcare.
Okay, but it's going to require quite a bit of customization and development work, right?
It depends on the application. It will require some, maybe a few months, 10 months of work. It's not start from scratch, but it's not just a quick snap. So it's in between.
Yeah, I can tell you, though, that at this stage in our history, our focus has not been to develop a platform for others to do development on. I think that's a fair statement at this stage. The platform is really at this moment for our own development.
Right, right. And beyond these two particular areas, referral care management and prescription drug management, are you thinking about other solutions? Is your client asking you to do more?
So we also have partners that came in to look into using our platform for financial management for healthcare area. So it's a very different space. But they will do their own marketing. They will put their own capital to expand it. So we saw the opportunity to use our IP without diverting our attention.
So they're going to be you're licensing your platform to them to build on.
Correct.
Well, that's an interesting way to go, and I certainly think that being the nucleus of a platform like that for other providers, because the healthcare system is so fragmented. There's so many people providing so many pieces. It's hard to understand how they all neatly and easily fit together, particularly under some of the new guidelines that the government is throwing at you. So it's a very profoundly experiential environment where a lot of lawyers and a lot of people are figuring it out on the fly. It's a big challenge. Have you spoken to many angel investors in this sector?
Not in the sector. I talked to some of those locally. So we do have around 20 angels already investing in the company.
Right. So you really should go to the Angel Capital Association, their website, and they'll list all of the major angel investors, some of which are focused on the healthcare area. I'd be more than happy to, again, offline, give you some recommendations of a variety of angel groups that would look at you and say, I got it, I understand your business, I'm excited about it. The average angel investor sees this as complicated, difficult, problematic, very costly, as you said, and is scared by it. Again, because you need so much money, and over that period of time, it's going to be a problem for them not to be, diluted out. Who's your acquirer? Who's your exit?
Mostly soft. Yeah, I say other larger software IT company. There are quite a few very large public healthcare IT companies in the market today.
Got it. Okay. Okay, so just to wrap up, congratulations first on certainly building a very nice business and meeting, the needs of your customers to provide some very valuable solutions. You should be commended certainly for that. And your experience in being able to do that has certainly enabled you to get to this point. The need for the money that you've got is going to be definitely a challenge. I would break out your development costs. I would break out your marketing costs, and try and find some method by which any angel investor could see that the money is actually going towards building a platform. That's the investment. Again, without the opportunity of looking at your finances, I would certainly focus on finding angel groups. You're investor raising. Let me point that out, not money raising, who are experienced in this area. Most angel groups aren't. I can give you some names up here in New York if you'd like.
That's terrific. That's really helpful.
Great. Thank you very much.
Yeah, appreciate your time.
Thank you so much, Brian.
Bye-bye.
Bye.